Hey Rebels, welcome back to the channel. So we're seeing a lot of breakouts in the crypto markets, and I wanted to go through a high probability buy setup and the various elements involved so that you can go and apply these to the charts so that you don't have to chase the breakouts that have already happened. We're going to find ones that have yet to come and give ourselves a little bit higher probability chance of staying on the right side of the market and not necessarily getting shaken out of our positions or caught on the wrong side of that. So if that sounds good, like and subscribe. We're going to dive right in. We're also going to do a brief weekly analysis, which is something that I do on the channel every week. So without further ado, we're just going to dive right in. So far, we've had 3 weekly closes above this trend line that we've had up for quite some time, going from the 2017 peak to the 2021 peak. You can see here that it's acted as resistance several times, and we had finally broken through, and we have several weekly closes above this trend line, which I do like to see. And we formed this inverse head and shoulders right here, and it seems like we're just coming down for a retest. So that all seems perfectly normal. The other thing we've been tracking is the Bitcoin dominance and the USDT dominance. So the Bitcoin dominance, we had a nice fall break out of this falling wedge pattern that I had on the chart. I don't have it on there anymore because we've broken out of it. We came down to the 50% level. We're definitely expecting a rebound here. If I dive into the daily, it's a little bit more evident. We had a very strong downturn in the Bitcoin dominance, giving us an indication that the other sectors of the market were starting to heat up a little bit more compared to Bitcoin, but we were expecting some kind of bounce off of this 50% level. We have since got it, and we will have to see whether there's more upside before we turn around and roll over more. We're still in the very early days of this, but this is looking very healthy. And I would say a break of this 50% level is going to be a very healthy sign, and then we will come back down to retest this channel that we're in. And a breakdown of that is really where things get very exciting. Okay, so we're still early as far as some of the bigger, larger moves in the altcoin space. The other thing we've been tracking is the USDT dominance. We've been on the right side of this one for quite some time. We were basically called the top here, not on the day, but probably around here. We called the top here. And expecting lower prices coming back down to retest this trend line, which is basically inverse to the Bitcoin chart where we had that all-time support line. We have this, or resistance line, we had this all-time support line. Okay, we have broken down before and kind of sloshed around, and we are looking now for potentially either some more consolidation in these areas or further breakdown. Further breakdowns would be very good. We still have to see. We may have a little bit more bleed to the upside to retest this trend, but so far we're in a nice powerful downtrend. So so far the trends are down, and that's what we gotta basically just follow the trends. So everything that we've been tracking on the channel seems to be going very smoothly and kind of in the direction that that the market is telling us. Not that we've been anticipating or trying to guess. The market has been suggesting more downside, and that has what has been happening so far. So basically next targets for me for the USDT dominance would be this trend line and this support line that is come in every single time. Now, if we get a breakdown of that, that will be a fourth time breakdown signal, and that will be very, very strong for the alt. So we're just going to keep track of that. Basically, I think we're in for good times. Depending on how far this USDT dominance goes, will kind of be a gauge and a indicator to us at the strength and euphoria of that move. So anything down in these zone, I have these couple zones here. Anything down in this zone, I think Bitcoin and large caps are going to do very well. And then anything below this, a breakdown of this zone, I think we're going to get that full altcoin mania that people are expecting, that people have been anticipating, and in fact that people have basically been calling for the end of, or that there will be no alt season. Okay, so that actually I think we're a little bit closer to having that altcoin season than not having that. Okay. The other thing that we've been tracking quite a bit is the exchange volume. Had nice, healthy uptick in the exchange volume, breaking out of this lows, breaking out of this consolidation. We are having a downtick right now, but what we're going to be looking for is higher lows to form. We don't want to see something like this where we drop back down and stagnate, because that's going to definitely be very hard for our altcoins to maintain those higher prices. So that's something that we keep a very close eye on, is the 7-day moving average of the exchange volume. Basically, if this chart is going up, we can kind of just carry on and continue on and expect higher prices, or at least the prices have less of a chance of smashing down on us and taking us by surprise. Okay, I'm going to zoom in quickly to the Bitcoin chart and show this very basic pattern that we've been forming as well, which is a, well, you can call it what you like, triangle pattern, bull pennant to bull flag, whatever you want to call it. Basically this triangular pattern here where price consolidates and then has to choose a direction. Basically, when it's in this pattern, it's kind of indecision. And then when it breaks out, we have a little bit more decision. Now, these are tricky because the triangle changes as things go along, right? So we had kind of a fake out to the downside, and that's what I want to discuss today, actually, is that I had talked about coming back down to retest this head and shoulders pattern, which it seems like we have done, as well as the liquidation heat map also gave us some kind of clues that this might happen. So if you're not aware of what this is a liquidation heat map. It's showing the various levels in which various positions will be liquidated. These levels up here are areas where people who are trying to short the market will get liquidated. These levels below the market here are where people who are trying to go long will get liquidated. So how exchanges make their money is they get monies from fees and also from liquidations. So you can see as we started this consolidation indecision, there wasn't a lot of leverage building up or positions building up in the as the farther that we go along in this consolidation, where price hasn't really trended one way or the other, those orders get stacked and stacked and stacked, and they become more evident where those orders are. And when there's a bunch of these orders, what they'll do, what market makers can do, will push the price down to liquidate these participants before moving on. And so what we see was there was a lot of liquidation levels below the market. And if they want to push prices higher, what they will often do is they will push price below this level, liquidate these people before moving on to higher prices, because now we have a lot of liquidations above the market, even more people speculating that the markets will go down. So it's not going to be surprising, even if by the time you see this video, that we see higher prices here, because all of these orders, if they get liquidated, they turn to buy orders, which then pushes the prices even higher. So that was all. We were all kind of anticipating that potential that we would have a fake out, which we see this nice big fake out wick, a nice retest. Technically, this is looking like a pretty good setup. Now we have to, of course, wait till essentially we really confirm breaking out of this area here. Really, a breakout above here will be real confirmation that this was accumulation. Okay, so everything kind of comes with a grain of salt and a little bit of nuance, but hopefully this was helpful in just using basic trend lines and exchange volume and things like that and liquidation heat maps to get an idea. At the very least, we weren't going to be afraid if price fell below this pattern, because basically conventional knowledge says whichever direction this breaks out will be the direction that it continues. Okay, and that doesn't always happen that way. You can get fake outs, okay? And then I just wanted to briefly walk through kind of how those fake outs happen and maybe potentially why they happen, okay? So now, without further ado, we are going to dive into some charts here and talk about this setup that I was talking about. And we can see here that I have basically this was the thumbnail. This is the SUI chart. And I just want to go through a couple very simple elements to go through that will help give you more confirmation that you are going to be on the right side of the market, because effectively what we had here for quite some time was that same kind of pattern where we had lower highs, but we had higher lows. So it's like an area of indecision, right? And now that we've broken this downtrend and formed a higher high, we are now really trending higher. So basically what I'll do on any given chart is I will, especially out on the weekly time frame, and I think these are much stronger on the weekly time frame, is just draw from the highs on a weekly time frame and draw that line. And it's going to look a little bit different on every chart, but everyone's going to be roughly the same. And dive into the daily chart. And what you really want to see is you want to see a break of this trend line. It doesn't always have to retest, but if it does, you want to see a nice retest, accumulation here, and then we've broken the highs here. So potentially we're going to see higher prices here because we've also basically broken this support resistance line here. For now, we want to see confirmation of that, and my version of confirmation would be daily closes and higher lows above this line would give you even more confirmation. But you can see that just by drawing this basic trend line and noticing that we are forming higher lows, which is the first indication that you're in a bullish pattern, then that basically helps. This helps give you the confirmation, the highest probability that prices are going higher. Now that comes at the cost, quite a bit of cost actually. You don't capture the lows. We're already 150% off the lows, but we have a higher probability that this is the end of that indecision, the end of that consolidation, or the end of that correction, right? It comes at a higher price. That's the premium you pay. Now I want to dive into what are some elements that we can look at to give us maybe a little bit of a lead on that, because if I drag the chart over here, I do have a SUI position around in here. I didn't capture the very low of this higher low, but there were indications telling me that earlier on, this might be a potential area to enter. So what I have down here is the average true range. And what the average true range is telling us is how much the bars move on any given day. By what dollar amount do the bars move on average? And you can see that as price continues to increase, typically the volatility will also increase. And as prices fall and continue to fall, the volatility will also increase. So something that I like to use the volatility for is to get a better entry, because volatility is typically a little bit more predictable than price. You're going to have volatility go up and down, and it is a little bit more predictable than price itself, I think, or it can be used in confluence with the price. So you can see that higher volatility at times was not a good time to be interested in the market. You would have caught the peak, even though this chart looked really nice and may have looked like a really good time to enter the market. And when volatility was low, the price chart didn't necessarily look very bullish and it was looking pretty sad, but those would have been better times to be interested in the market. So I use volatility quite a bit to catch myself. Like, are we in an increasing volatility environment? Are we at high volatility relative to what we've seen before? Or are we at lower levels relative to what we've seen before? You can use support and resistance lines on other things like the average true range. And it just so happens that we have kind of a support and resistance line in the average true range. So what had noticed is that we were coming down here, we got rejected, we were able to draw this trend line. So now I am anticipating, I'm trying to catch if we do see a higher low. That is something that I definitely want to see, or a double bottom, something of that nature. But now that we've had this trend line, if I don't want to wait for the confirmation, I'm going to look for other subtle clues that we are potentially going higher. And one of those things was the volatility. So I noticed that we were double bottoming in the volatility. We started to have an uptick in the volatility as the prices were increasing. And that was basically my signal to start going long, because we had formed this higher low, and there was a lot of evidence that this was the structural low of the market. And so I liked that we were seeing a higher low, and I was happy to get in at these prices, knowing full well that we were potentially going to see resistance at this trend line, which we actually didn't. We broke cleanly through and found support. So that was the way that turned out. So I'm in SUI right now, and I will sell probably when volatility starts to increase and maybe get to these levels. I'll use that again to gauge whether I want to be in the market or out of the market. Typically, you don't want to enter the market in a high volatility environment, because that will also increase the volatility of your emotions. Okay. I'm going to give you one more example here, and then I'll let you go, because you can just apply this to as many charts as you wish. The basic premise is draw your trend line, and if you wait for a break of this trend, you're going to have a higher probability of success. Now, we had a break of this trend line and we come back down for a retest. Even more confirmation would be a break of this top. Now you're sitting in really strong territory. That's what I'm talking about, higher probabilities. Once you breach this support and resistance right here and find support, you have a higher probability of further upside. You don't capture the bottom, but in this case, the bottom right here is much closer than in SUI, right? I think for like at prices right here, coming back down for the retest, which could be an entry, that's 35% away from the market. Whereas SUI, when it came back down, or where prices were, it was like 100% or something like that. So, and then the other additional thing that I like to see is we had prices come up as volatility started to increase. So this is actually where I got my entry. I'm sitting at a loss right now because those were my triggers. And of course, I have decided for myself that if prices breach these levels, then I'm out of the trade. I don't actually these levels here, because that just to me is going to signal more weakness, right? And so that's the other thing too. It's like when you snag your entry, what I did basically is I bought on a retest of support here, knowing that we could likely come down for more of a retest, and I was actually okay with that. I'm not worried about that. In fact, I could increase my position size here if I wanted to, but I'm just going to leave it alone. But we did have that increase in volatility with the price going up, breaching the trend line, coming back down for a retest. So if you were waiting to get in this and you wanted an even higher probability setup, you could wait for a breach of these tops, which would actually put you at a very similar entry that I have right here. So hopefully this was a helpful to see just the very simple tools that you can use: a trend line, a break of the trend, a retest, and then of course a break of these tops and finding support on this support and resistance. Those are just a few key elements, and the more that you stack together, the more higher probability of upside you can see. See, I front run this one quite a bit actually, because I actually bought before I even retested this trend line. we came up here, we did see rejection off of this trend line, and I actually was buying on support somewhere in this area, knowing that we could probably come down a little bit further, but I also knew my risk ahead of time, and I just really wasn't too worried about it, right? And that's kind of the name of the game with trading. You have to know who you are as a trader and what you can stomach. And honestly, if you can't stomach downside or sitting in a position in a loss, then this isn't for you anyway. So either way, hopefully that was helpful. Like and subscribe. Leave some comments down below. Hopefully this was helpful. I can obviously go through more trade setups. There's many more trade setups than this, but this is just a very, very simple thing that you can add to your charts and just kind of add to your tool belt when you're looking at different projects and trying to assess their own strength and weakness. One that I am looking off and eyeing off that I'm very interested in actually is Say Network, which is a layer one. And again, if we just wait for a break of this trend, we're going to have a higher probability of that we are going to see higher prices, at least for longer even. And then even if we waited for a breach of this top right here, you know, from there, a measured move to the top of the range there, 176%. So you can do this all day long with those. You don't need to capture the lows. Yes, obviously you get more multiples when you hit the lows, but you have higher probability of that going against you, okay? So hopefully that was helpful. And then again, too, going back to the average true range, I'll leave it on this. We're seeing a nice increase in volatility as prices are going up, okay? Because that can actually be predictive on the inverse. If volatility increases and we're seeing breakdowns to the downside, same thing actually really applies. It's suggesting that we could have further to go to the downside. So anyway, like and subscribe for more. We'll talk to you later, guys.